Hello everyone, this is Juan Sarmiento and today is Friday, July the 14th. Good news for our account. So far we have a profit of $3,300. You can see that we're very close to $50,000. So that will be about 6.6% over the life of this account. Obviously we've been building the account, and year to date we have $4,000, but you can tell the number of weeks simply by looking at the analyze tab here, because it tells us how many shares we have, 110, and more or less I've been putting one share a week, so it's 110 weeks. All right, so that's about 2 years. So 660 is not great, but we have been accumulating enough so that this is working out the way it should now. Consider that the SPY dropped significantly. If you want to see over the last 2 years, simply select the chart and go the SPY and say weeks, and you go back a couple of years. Here would be where do we put it? We are in July 2023, so we started in July 2021. Let's move back a little, and you can see that I started this account when the market was rallying strongly. Okay, so it made a high, and now we are catching up. As the market was going down, I keep on buying, this dollar cost averaging, so that my overall cost per share is relatively low. Now that the market has bounced back and is approaching now that $479 value per share, we are at 450, so we're getting really close, which means most of my shares would be now profitable. Okay, so you can see that I enter here a channel analysis as the market was going down. So obviously that was broken, and that was the indication that of the market was going to be bullish from here on. See how it crossed through the Ichimoku cloud and now is solid above it, which implies that we are in a bull market. Now we can delete this channel and we focus on this channel here, the uptrend. And you can see that I draw certain lines. They all coincide with a previous high. Okay, previous high. And as the market reaches a new high, as a previous high is accelerated, as a previous high was exceeded, it becomes a support line. So if there is a pullback, it could pull back to that line, and I made it thick because it becomes very strongly. In the same way, this previous high is also should be a thick line. And I'm gonna make it like 3 points thick, because that's gonna be hard to get through. And you can see that it just so happens that it's coinciding with the upper range of my channel. So that's gonna be a strong point to go through, okay? It's not gonna be easy. It all depends on the strength of the market at the time. Okay, so here then we can even put another line here, which will be the all-time high. And in this case, I will put a width of 4, or thick, 5, really thick, implying that that's going to be hard to exceed. But once exceeded, then it becomes a strong support, and it would imply that the markets could reach even higher points. Okay, so it all tells us that our account would be doing very well. Consider that we started by putting $500 every week, and that seems relatively simple. Now we have a little bit of a nest egg, don't we? If you are close to retirement, once you reach retirement, you can sell calls against these shares, and that's a way to getting some money back once in a while. So you get, the covered call will be something like a week to expiration. 4 weeks to expiration, or 30 days, 28, 35, that's cool. And you would select an option that has 0 intrinsic in the highest possible extrinsic value. And here it is. It would be the 450, that's where we are right now. So you would click bid, and because we have already more than 100 shares, one option call will cover for 100 of those shares. If you take a look at the risk graph, yeah, we are still delta positive because we have another 10 shares that are not covered by the covered call. So then you could recover $673 every month, okay, out of the $5,000 or $50,000 that you have. I'm not going to do that because I'm assuming that most of you are not close to retirement. Otherwise, you would not be playing this game, I don't think. But once you reach retirement, if that's all you get, if that's all you have, $50,000, well, at least you could get those $670 every month. You've been putting $500 every week. Now you can get $600 every month. But at least that's a way to, when you are young and can put away $500 every week, then the payoff is that when you are retired, you don't have so many expenses, you can complement your Social Security income. That will be the logic of it, okay? In the meantime, we have $314 in the account, and so because I want to add one more share for every week, I would do that just now. So for that, let's add $500. You know that this is a fictitious account, so I'm going to simply adjust by adding $500 fictitious dollars, and then I can afford one more share. Go to the Analyze tab and click on the bid, and then just change this to 1. And it's going to cost me $449.97. Okay, that will be my number 111th share. Let's just do that. And we will keep doing this every week. And let's wait until it gets filled. It should get filled no problem, because as you can see, the market price is below the price I bid. So that should be filling up very shortly. Okay, so we keep an eye on that and to make sure that it gets filled. That's all for today. Thank you very much for joining me, and see you next time. Bye-bye.